Right now, you need to know exactly where you are right now so that you can decide that, okay, I'm ready right now. I'm not ready. I want to be ready. This is Ola from OLALawrence.com. Your real estate needs, your wants, everything, we can help you here. So if you need a free consultation, you can see the link on the screen. OLALawrence.com is where you go to book a free consultation. We can help you with any questions you may have. So today's topic, I want to talk about the first step of the home buying process. All right, so if you didn't see the last video was about should you buy a home or should you rent. I had about 7 different factors that I covered on things you should consider in order to make that decision. I cannot make that decision for you. You have to make that decision for you. What I can tell you is that if you are like most people, a very high chance that you need to be working towards purchasing a home in order to keep most of your money, to reduce your taxable income and things like that. So, but today we're going to cover the first step of the home buying process. The home buying process starts from the very step I'm going to share with you today all the way to a closing, which is basically when you will sign the paperwork that says you own the property. Typically at that point you will wait, I think, a few weeks before they send you your deed and things like that. Depends on what state you live in. But the first step of the home buying process is money. Where is the money? We need money. We cannot buy a property without making sure we have money. And fortunately, anyone can get qualified to buy a home. Unfortunately, not everyone is qualified. So if you note what I just said, I said you can get qualified. All right, you can get qualified. You may not be qualified yet, but you can get qualified. And you can buy a home, and it's something that you should absolutely consider. But the first step is, where's the money? There's quite a few things that we should talk about. I have like about 7 different pointers again today that I want to talk about when it comes to money that you should pay attention to. But the very first step is to, if you have decided that you want to buy a home, is to book a consulting session, and we'll get you connected with a banker that will get you qualified. Okay, there's something we call the pre-approval or the pre-qualification. There's a slight difference between the both, but basically what both documents shows is that you're qualified for a certain amount of dollars to buy a property. But that's based on a few factors that would have been checked by a mortgage officer, a mortgage loan banker, or even a bank. I generally recommend to work with a mortgage loan banker and not your regular bank, because they know certain loopholes that you may be able to take advantage of that your local bank may not know. Okay, now your local bank will have some programs that may be beneficial to you. You never know. But what I can tell you is that with everything else being equal, it's better to work with somebody who work with home buyers. It makes the process that much easier, and it makes it smooth. As you can imagine, there are quite a few steps in the process. Okay, but the very first step is to identify where the money is coming from. Okay, generally I like to encourage you to use financing that may be available to you. You need to use financing as much as possible. Use other people's money whenever you can. Some people argue that you should use 3.5 down payment as opposed to 20% down payment. The 3.5% down payment is basically what is required of you if you use a FHA loan, which is a loan that's available for owners occupied property. What does that mean? What does that mean? That means you are going to be living in the property. If you're going to be living in the property, then the government has a government-backed or government-insured loan called the FHA loan that requires only 3.5% down payment. Now, the other alternative, the most common or the Most popular alternative to that is the 20% down payment or 25% down payment for a conventional loan. So the way you want to look at it is this. I try to break these things down as simple as possible. If you're buying a property and you want to have every say, typically for every $400,000 home, you need $100,000 worth of your own personal private funds to purchase the property. If you have $100,000 for every $400,000, you have 25%. You can always buy any property you want, and you can actually stay very competitive when it comes to rate as well too. That's the general rule of thumb. The same thing goes for even commercial real estate. But again, if you're a first-time home buyer or you are trying to buy an owner-occupied property where you believe in yourself, the government has this program called the FHA loan, and basically it allows you to put down only 3.5%. So for $100,000 home, all you need is $3,500. Okay, so for a $400,000 home, all you need is about $14,000. Okay, $14,000. Yes, to put down as down payment to purchase the home, as opposed to needing $100,000. So there's arguments out there that say, hey, you can avoid certain type of premium insurance if you just come up with all the 20%. Or it's better to come up with the 20%. That's not always true. Just do your math, okay? Do your math. In the long run, you may be better off just coming up with $14,000. The FHA loan, get the FHA loan. If you're doing well over the next few years, you can always refinance. You can also take advantage of other opportunities as time goes on, if you're open to that. But the cost of not buying a home right now, because you don't have $100,000 or 25% down payment, may be a lot greater than just securing your position in the home ownership club right now. Okay, so take advantage of other people's money whenever you can. Yes, there are certain costs that come with that, but the cost of not having being a homeowner right now may be greater, so just something you want to consider. But again, a good loan officer, which we do have one on the team here, that will help you determine what's best for you. Okay, but it's something to really explore. Okay, so in order for you to be able to use financing, you need to be credit worthy, right? You need to have a good FICO score, credit score. That's basically how the powers that be determine if you've had good behaviors in the past with regards to handling credit. Okay, so your credit score can go anywhere from 400 to 800, and the higher it is, the better. Okay, that's just one of the factors. Okay, there are many other things like the ratio, your debt to income ratio. Debt as in how much money you owe altogether, your car loans, your credit cards, all the delinquencies, all those things. When they had them all together and they compare them against your income, what is that ratio? That ratio needs to be safe for the bank to feel safe to give you money. Because think about it, they're giving you money because they also want to make money from you paying interest for the next 30 years, typically, right? So if you are pretty bad with handling credit over the past if you're not very good with handling credit over the past years, then they won't feel safe to give you money. Okay, so the only way for them to know is to look at your credit score. So if your credit score, there's certain credit score thresholds that certain programs look for. The loan mortgage officer will be able to tell you the exact thing, because again, it's unique to you and it's unique to your particular scenario. But again, the only way to find out is to book a consulting session and find out. Even if you're not making any moves right now, you need to know exactly where you are right now, so that you can decide that, okay, I'm ready right now, I'm not ready, I want to be ready next year, I want to be ready 2 years from now, 6 months from now. The best thing to do is book a consulting session and talk to a loan officer, and they can basically help you determine if you're ready. And if you're not ready, they'll tell you what you need to do to get started. You'll be surprised what you need to do to get started or to get qualified. It's usually very small stuff. It could be just one little thing you need to take care of. A lot of times you may have collection activities on your credit report, And the last thing you want to do is start sending money to those people, because frankly, you don't need to be sending money to credit, what do you call it, credit collection agencies. Okay, collection agencies are not the people you actually owe money to. They purchase the account from the actual people you owe money to, and you don't need to, a lot of time you don't need to send that money to them, at least not as a whole. A lot of time you can get on the phone and negotiate as low as 10% of what you actually owe, and you'll be surprised, and they will gladly clear that off your credit. But again, the only first step, the one step to know if that's what you need to do, is to first of all pull your credit. Now you can pull your credit for free when you work with our loan officer here. They'll pull your credit for absolutely free, and they'll be able to do a free consulting session with you to tell you what is looking bad on your credit at this point in time. So again, beyond credit, there's ratio, debt to income ratio. They need to know that the total debt you have is not way too much than what they can afford to give you a mortgage loan. So another thing is down payment. You need to have some kind of money in the account, right? So a lot of time, maybe you've been living paycheck to paycheck. Maybe you don't have any savings. Maybe you have enough. They'll be able to tell you based on your particular personal information if you're ready to go, or you need to save a certain amount of money. Because in addition to down payment that you make, like for example, if you're buying a $400,000 home and you were using a conventional loan, that would be $100,000. If you're using an FHA loan, that would be $14,000. So in addition to the $14,000 down payment that you will need for an FHA loan, there's also something called closing costs that you need to have ready to go. Closing cost is basically the cost to put all the transactions together. 1 second here. Let's see. Just want to make sure I have something here. All right. So closing cost is basically the money that you put down. Okay, that is your own skin in the game. Okay. So that will be the $14,000 you put it down, and the $14,000 is the down payment, but the closing cost is typically around 5%. Okay, it's not always 5%, but that's just the ballpark estimation that I use. So for example, you should, for a $400,000 home, you should expect somewhere around $20,000 in closing costs, maybe a little less. It depends on everything else that's going on with your particular location. But basically, this is how you pay the lawyers. That's how you pay the title agency. That's how you pay the companies that pull out the paperwork to make sure you're protected, that put the title insurance together to protect your interest long term on the property, and a few other things. And even the loan officer, this is how they get paid. It could also be agency fees, depending on how you got the property in the first place. But there's a few costs that goes to these different people. Sometimes appraiser don't get paid until closing. Sometimes the inspection company that helped you make sure that the property is in good shape gets paid at the closing. All right. So there are all these costs that come out to about around 4 to 5%. Okay. So that's something you should be prepared for. But again, a loan officer will be able to tell you what you can afford, what you can't afford, based on all these different factors. Another thing you should be aware of is something called the seller's concession. Okay, so there's a way to can structure a seller's concession into a deal where you're purchasing the property for $400,000, but the owner is willing to give you some 3% back for seller's concession. So 3% is for closing. They give you that money to help you with closing. So from a $400,000 loan, that would be about $12,000 that they will give you back towards your closing. It's not money that goes in your pocket, but it's for closing costs. So in order to make the deal a little bit sweeter for you and make the transaction move a little smoother, right? So instead of you coming with $12,000, they'll give you that $12,000 from the $400,000 purchase price, and that goes towards your closing. And if that's available, your loan officer will let you know, but it's usually available. But the owner has to agree to it. The seller of the property you're purchasing has to agree to it. But all of this can be taken care of in one simple step, okay? And that's by talking to your loan officer, and they will basically take care of all of this information and make sure that you are ready to go. And if you're not ready to go, they will always tell you what you need to do, okay? Now here's the key thing I need to tell you. They will have to pull your credit. in order to be able to tell you all this information. Because the reason why I'm saying that, because I've seen people say, why did you pull my credit? Well, usually they tell you before they pull your credit, but just in case, we missed that in the middle of conversation, they will pull your credit. And pulling your credit means they will basically need your social security number to pull your credit. And a lot of people worry about inquiries. Well, that's going to stamp inquiries on my credit, blah, blah, blah. Well, here's the thing. Just one inquiry to make sure you're good to go or qualified, or you need to get qualified, it's not going to make or break your credit score. The reason why inquiries affect people's credit is when they start shopping around for cars and things like that, and they're pulling the credit multiple times in a day. Then of course you can worry about inquiries, because it's a sign again that your credit is weak and you're trying to do something shady or crazy, right? That's the whole point of inquiry. But when you think of credit, you think of money, just a little common sense can go a long way. Okay, they will pull your credit. They will be able to determine based on that what you can afford and what you shouldn't be touching. Okay, and a loan officer will tell you. Here we do have somebody in-house that will tell you what you need to do before you can be qualified to buy a home. You need to know that right now. Even if you haven't decided you want to buy a home, you need to know what's going on your credit, and then they will give you free consulting, and they can actually give you a free credit fixing too, depending on how bad your credit is. But it's something, if it's not free, that's extremely affordable, where you don't have to pay back certain debts that you may have in the past. A lot of times you don't have to pay them back. They are lost costs, and they are things that are written off in the past that can be forgotten with a few phone calls. Okay, so that's seller concession right there. Those are the 5 things. Again, credit, the debt to income ratio, down payment, closing costs, seller's concession, things that you should ask your loan officer, once you get them on the phone, right? So that's that. When it comes to the first step, we need to make sure you have money. The first step is not to show you houses. The first step is not to send you houses. The first step is to find out exactly how much you can afford based on your income and your credit worthiness. That's the first step. Because there's so many houses. We're not going to show you all the houses in the neighborhood. In all the different neighborhoods, we need to, number one, take you to a neighborhood of something you can afford, that's still safe, but that makes sense based on your particular unique profile. Does that make sense? All right. So I was out about during the last week, and I talked to some tax professionals, and some tips I wanted to share with you with regards to taxes. Okay. First of all, when you open CNN, Fox, CNBC, NBC, and you're watching any of this particular old school dinosaur network, okay, this network right here, YouTube or Facebook, WhatsApp, or New School, and the only place where you're probably going to get the real deal information most of the time, I'm just giving you a quick tip right there. Okay, CNN, Fox, NBC, all those things are dinosaur network, and they are politically driven. A lot of times they won't share the information you need to know with you. Now, so let me guess, they're probably busy right now worrying about President Trump's character, right? So you and I, we don't need to worry about President Trump's character. We need to worry about how his policies affect our pocket, how it affects our money. That's all we should be concerned about in a digital age, okay? So with that being said, you need to be aware that if all they're doing, that's what they're doing, right, is talking about Trump and his character, is of no use for you. You need to dig a little bit further and find out more information about how his policies are affecting you. So you need to talk to your accountant. You need to talk to your tax specialist so they can tell you how you can take advantage of certain things that are happening. So for example, family tax credit is something you can take advantage of. They're giving people a minimum of $500, I heard. You need to find out, ask from your tax advisors. They will tell you if you deserve this money, but this money are available. There are also certain tax credits that go with home ownership that you should learn about. Ask them, they will tell you, okay? But I wanted to share that with you so that you don't get lost and think, okay, this guy, no, you need to start paying attention. There are some policies that he signed into place that you can benefit from within the next 1 year to several years, and you can take advantage of them. Also, they've increased child tax credits as well too. Ask questions from your tax advisors and take advantage of these things, because it can go a long way in helping you beef off your bank account. Does that make sense? All right, so I just wanted to share that with you really quickly. As they come to me, I will share with you. Please don't forget, help me share this video with everyone who is in your loved ones in your network. Just forward it on WhatsApp. That's all I need you to do. You'll be helping me, my family, but you'll be helping them as well too, because they need to have this information, right? And I will continue to come back every week. Hopefully you've been enlightened and educated. Subscribe to the channel. Just click subscribe if you're on YouTube. It's a red button right under this video, and also there's a little bell right next to it. Click on it so you can join the notification club. Okay, click the subscribe red button. It should be right around here, somewhere here, and then click the bell right next to it to make sure you're getting notification by email or anything you choose anytime I release a new video, which is basically every week. But you know, life happens, so you want to make sure you're getting this video. Even if you don't have the time to watch it immediately, you can basically save it and come back to it. But please help me share it. Click thumbnails on the video, because that will let YouTube know that you enjoy it. Thank you so much. Again, hopefully you've been enlightened and educated, and I will see you on the next one. Peace.